afternoon, everybody. Welcome to Trader Merlin Show. It is your weekend edition. Friday. Not the Friday I had anticipated in any way, shape, or form. We've got a lot of stuff to talk about today, and I hope will be a good show. But before I do that, I have to give a shout out and apology. I was supposed to be in the Simple Options Center options session today for the Mastermind community at Trading Academy, and I was sitting there watching the market close, and I completely spaced on the fact that I was supposed to be in there. So I have to make up to you ladies. They're probably not even in here yet. They're probably still covering for me since I was supposed to be talking in that session. So my apologies, guys. I completely spaced on that one. I even said yesterday, I'll see you in the Simple Options session, and I completely spaced on it. So unless I write it down, it's like a mental stop. Mental stops don't work because you don't do it. And I didn't have it written down on my calendar. It was in my head. So when I see them pop in the room, I'll give another shout out and another apology there. So I'm sorry for anybody who was expecting me to jump in that session today. My bad. Let's go into this trading week wrap up. All right. I guess the crazy part about today was just how negative it was. And we had negative pieces come across the board from economic data to mainly economic data and people focusing on that, plus major news in crypto markets, for those of you that are freaking out a little bit there on the I know, Tofi. I just gave a big apology for that one. I totally messed up, Tofi. I know I was supposed to be in there, and I know now. I forgot. But bottom line is I forgot, so I'll do it tomorrow. I know. Let's do it Friday, Lisa. Let's do it Friday. I just didn't write it down on my calendar, and it's funny because I was sitting there, and thank you, Bonnie. I would have completely forgotten unless Bonnie hadn't emailed me. And I was sitting there watching the market close because I have MicroStrategy positions. I was doing some covered calls against, or preemptive covered calls against that position, and I would have come in there had I written it down. So let's shoot for next Friday. Let's shoot for next Friday. What's the date there? Friday let me get my calendar up here so I can look at Dan. The 28th. I don't believe I have anything going on. I will bring up a calendar here just to make sure I don't have nothing going on, and we'll make it for 1 o'clock on the 28th. Yeah, I don't have anything scheduled right now for that, so it should be good. Next Friday, if it works for you guys. If not, we'll just pick another Friday, and I'll put it on my calendar so I won't mess up. Again, mea culpa, my fault. Sorry. All right, let's dive into what caused a lot of the pain today. For me, it boils down to a couple different topics. And at least on one perspective, it's the bears about time have their attack, right? I have this wonderful graphic here. The bears attack. And look, it was a one-day thing. Not that we're done or out of the woods yet, but certainly when you look at the price charts here, I had anticipated it, that we would come back down towards this uptrending line and then move up from there. We'll see if that actually does transpire. We tiptoed a little bit past that uptrend line today, but I thought it might take a couple of days or a week or so to get down to that trend line. It happened in one day. So pretty aggressive pain point there. And why? Why was it ripping down like that? Well, in my opinion, it goes back to things that we've been talking about on the show, which is data worries. People are concerned that the economic data is starting to paint a little bit more of a sour picture, and Trump is helping fuel that with the tariff talk. So let me run through a couple of different things here. First, let's go back to the dreaded I word, inflation. Now, obviously we had the consumer price index and the producer price index tick up a little bit, right? It wasn't a dramatic increase, but it was nonetheless an increase, which has people somewhat nervous. Because remember, the Fed has been yanking down that short end of the yield curve, which will start to cause more inflation. If they bring down the cost of capital on the short end, more borrowing, more spending, economic growth for sure, but inflation will start to rise up again, and that would be a bad thing in the eyes of most people out there. So the inflation side is one that has a lot of people perturbed. And by the way, next Friday, we have the core PCE price index numbers, which is the most important one. That's the most important inflationary piece of data. Our second major data worry, and I'll put a little red arrow next to this one. So inflation, I would say, is negative. So it might be misleading here. Inflation's not going down. I'm saying the impact of inflation is negative for the equity markets, right? That's what I have as a red arrow pointing down. What relevance do you think NVIDIA's upcoming earnings will have? I don't know, actually. I mean, obviously, I don't know what they're going to do as far as reporting earnings, but I think it's going to have a huge impact on the market. And I think that Jensen Huang's comments about DeepSeek and the demand in the industry are going to be what drive our market for the next quarter. So I think it's going to be really important what happens to their earnings. Let's talk about jobs. So on the jobs front, we've had unemployment numbers which have been slowly declining, believe it or not. Over the past 8 months, we've actually seen the unemployment numbers slowly start to tick down. We peaked out at, what was about 4.3% back in August. Right now we're at 4.0%, which is great. It's nice to see this trickle down. I am in the camp of I do believe we'll see more unemployment over the next coming months. But for now, this I would put is actually not necessarily a bad thing. I would say unemployment at 4%, pretty good. Even if we get to 4.2, maybe 4.3, no big deal. I'm okay with that. Now, next piece is home sales. Now, I know that this doesn't seem that intuitive, like home sales, that's not really economic data. Well, it is. It's spending, it's consumption, and many people borrow against their homes as well. So home sales, whether that's existing or pending home sales, to me does give us clues about the economy. And what I found very interesting about Toll Brothers' earnings call was the CEO of Toll Brothers said, and I mentioned this yesterday or on Wednesday, he said that the rising interest rate environment is hurting their sales. It's damaging their sales, which we've talked about. The higher that 10-year bond goes, the more likely it's going to put pressure on people to prevent them from buying a house. And just to put it into perspective, if you guys have let's say you want to get a $400,000 loan, right? A $400,000 loan, and you got a 3% interest rate back a couple of years back. Your payment is roughly $1,600 a month for a 30-year fixed rate mortgage, right? On a $400,000 loan. Most people can probably afford $1,600. But if you did that same amount, $400,000 loan, but you now got a 7% loan, which is what's out there today, your payments are no longer $1,600 a month, they're $2,600 a month. They went up by $1,000 per month. And some people can't qualify for that. So if we look at the home sales, let's take a peek first at pending home sales. This has been not a good, it's been okay because it was above zero. Let's go to after the pandemic. But most of it is showing contraction. Most of these bars are below zero, showing declines in home sales. And our previous number was really bad, right? Month over month, we dropped about 5.5% decline in pending home sales. That's not good. And then existing home sales, I wanted to start two different places. I wanted to start here, where most people would look at this chart and say, well, that's not that bad. We look okay, right? We're coming back up here. It seems like it'll be fine. Well, we were at we came out at 4.08. We were expecting 4.12. So we missed that number, a decline there. But reality is, if we zoom out big picture here and look longer term, like going back into 2005, look where we were. Even as we were trying to recover from that big financial crisis, you have 2012, 13, 14, 15. We're looking at 5.5 million, 5 million, and here we are just about at 4 million. And that's with monstrous stimulus and big money pumping in and mortgage-backed securities being backed up and having low interest rates. Now, granted, they've been rising, but this is not a good sign when we see existing home sales so low like this. Now, I know what some people will say is, well, it could start to move back to the upside. Not if interest rates continue to soar. And the 10-year bond, which we've talked about extensively on this program, doing good for us today if you're interested in the real estate market. I've got that little yellow bar drawn out. That's our demand zone for yield, if you will, between 4.37 and 4.4%. We've hit this multiple times, right? The first retest happened back in February 5th. We hit it again on February 7th, and we almost tiptoed into it today. But it does look like, for all intents and purposes, the building of a descending triangle. Now, let me be clear. I'm bullish on yields. I think yields are going to continue to go up. However, that is a descending triangle pattern. I hate to admit it, but it is. Right? It's showing that the yields are getting weaker and weaker. And again, there's so many variables that are impacting this market right now. I think you would all agree. It's hard to pinpoint a data set and say, well, this should happen. Because if you step back, you go, well, this should happen. However, this could impact this. For example, everything being equal, yield should go up because the government is taking on more and more and more and more debt. But if all of a sudden Doge starts to slash jobs as they have been, costs go down significantly. Now, that may not be felt immediately, but certainly once we get past that 8-month window where they're giving people the chance to walk away and they no longer are paying those salaries, that may really start to impact our federal deficit. And if they can cut that down enough, then they won't need to sell as many 10-year bonds to cover all the debt interest payments, and we may actually see yields decline. So, I mean, really, markets are uncertain at this point. I mean, I can make arguments for both of them, and I know we are as well. Is that Trump's magic on yields? Yeah. Remember, he said, I demand or insist that yields go down. He can't do anything on the short end. That's the Federal Reserve, which is a non-government entity. He can say all he wants, but, does he influence the Federal Reserve and Jerome Powell and the FOMC members? Maybe. I mean, I'd like to think that he doesn't. They should remain independent from the president, and they should, follow their rules. However, he can manipulate the long end of the yield curve. He can do a couple different things. He could just start issuing more and more 10 years, which would flood the market with more. And ultimately, what would happen when you flood the market with more, then you have to pay a higher yield because you need to entice people to buy them. So that won't work. So what you do is you cut back on 10 years. So you reduce the number of 10 years being sold. Therefore, the demand for those products causes more and more people to buy them. Therefore, you can offer a lower yield because demand is higher. So he'll have to find some way to increase demand for the 10-year and also reduce the amount that's being sold. That would be the strategy for Trump and the Secretary of the Treasury to kind of figure out that model to get these yields to continue to decline. What's the biggest impact on the 10-year yields? What has the biggest impact? Supply and demand. And right now, it's supply because you have the Treasury Department is just printing more than we ever have to service our debt. So most of that 10 years being issued to pay the interest on the debt that we owe. If we can get the debt down so that the interest on that debt is much lower, then we would sell fewer of those 10 years, and therefore the yields would start to drop. So that's how you would impact that. And I hate to say it, but I don't hate to say it, but I'll admit it does look like that's where we could potentially be headed here. If we start cutting costs significantly and we feel that right away, then all of a sudden interest payments would decline. We sell less 10 years, yields drop, and markets start to look a little bit better. So also, the 10-year isn't the 30-year fixed rate mortgage, right? The 10-year is kind of the reference point for the 30-year fixed rate mortgage that most people are using. Typically, the yield for the 30-year fixed rate mortgage is going to be about 2 to 2.5% higher than the 10-year. And right now, you look at the bond, 10-year bond, there's 4.43, and I think right now the 30-year fixed rate mortgage, depending on where you're at with good credit, it's going to be about 6.7, maybe 6.8%. So there. Buy more Bitcoin with your Doge dividend. So Jim said, where did Jim go? There is. Do you think Doge dividend will happen? It's a great question. I guess maybe I should ask you guys. Let me poll you, and then I will. I'll give you my thoughts on this one. And it's $5,000 Doge dividend. Apologize for the spelling in this one. It's there you go. I got it fixed. I'm just gonna keep it binary: a simple yes or a simple no. You guys answer that one in chat. Will the $5,000 Doge dividend happen? Yes or no? Just curious what you guys think. And again, there is no right or wrong answer. I have my personal interest in this one. Sure, I'd love it if it happened. Who wouldn't want an extra $5,000 check thrown at them? Now, we talked about this yesterday. I would right away take that money and invest it, right? I wouldn't do anything stupid with it. I wouldn't go buy myself something. I'm not that type of person. But you remember last time they handed out the $1,200 stimulus checks, Walmart ran an ad for $1,200 TVs. It's awesome. Perfect timing. Now maybe they'll sell $5,000 items, but I don't know. See what you guys think. And by the way, I didn't say cheers. Cheers, everybody. Sava says, sounds inflationary. It absolutely would be. Is it more like $22, not $5,000 with the numbers? Well, we calculated out yesterday. What was it, like $800 billion they would need to pay all the taxpayers? So it wouldn't go to everybody. It would go to those who are paying taxes. So obviously, your 12, 13, 14-year-old's probably not going to get any $5,000 check. But I tell you what, if you're a young kid who's just started working last year, and you're paying a couple $100 in taxes because you just started a dishwashing job and you're working part-time in school, and all of a sudden you get a $5,000 check, you really want this one. It would be good. John G says, I don't think it would be good over the long haul. Yeah, I agree. I think. Oh, cool. I think it would cause more problems than harm. I think that the stimulus checks, I don't feel that they did a good thing. Most people just spent it recklessly, as Margaret says. I think most people just waste it. If you really want to do us a good service, then you go out and you pay down $5,000 worth of someone's debt, whether that's credit card debt or something like that. Of course, credit card companies would hate that. They wouldn't want that to happen. They want you to spend more and more and more and more. Yes, Ted says it would add to the national debt and thus be inflationary. Well, the argument would be, Ted and others, is they're saving trillions of dollars, so why not spend out a little bit, right? If we kept things the way they were, yeah, we would keep adding to debt. But this should be a reward for Americans for supporting us, and I'm talking like Musk or Trump, right? They would be supporting us because, these are drastic cuts, and this should be given back to the people. This is money that has been stolen from the people. Please understand, I'm now using I have my Elon Musk hat on, right? That's his argument. This is money that's been stolen from the people. And in some cases, maybe it has been, right? Wasted, squandered money. Now that we've cut that out, here you go. I don't think it should happen. Let's focus on the objective. We didn't elect for those who voted for the administration. Trump's campaign piece was, I'm going to drain the swamp. Of course, he said that last time. I think the only reason this is happening is because he has Musk on his side. Now, Musk is like, I don't care. I'm happy to gut these positions because it's not my business. I just know how to make it more efficient. And I think that's what a lot of people voted for when they voted for Trump, is someone to fix this problem. And arguably, he's doing it. But giving us a $5,000 check wouldn't help the problem. It would actually add to the problem. So I definitely think that you should fix the deficit first. Let's take that extra, whatever, $500 or $800 billion. Let's get ourselves back to a budget surplus. I mean, you get back to a budget surplus, and now talk to me about giving me a little bonus check and giving back the people something. But let's fix all this first. I don't think we should be patting ourselves on the back just quite yet, because we haven't quite felt the damage that this could inflict long term, right? You're ripping that Band-Aid off right away, which they say is better to do, right? Less pain if you rip that Band-Aid off right away. But there may be some impacts that we haven't quite foreseen down the road of cutting maybe too much. Now people are complaining that all these plane crashes are because we cut back FAA. I don't know. I'm not smart enough to know all that detail. But right now, I would vote in the no category. Let's see what you guys voted. 38% said that it's going to happen, and 62 said no, not going to happen. Yeah, I would be. It's so tough. I want it to be no, but I do think that that Trump would revel in the fact, and it would make all these people that don't like him all of a sudden. You just gave me $5,000. It would create a lot of positive spin for Mr. Trump. So I'm going to say no. Jack Welch would have done the same under Trump. Yeah. Jack Welch would have said, you're either producing or you're out. And, maybe Elon Musk has a lot of Jack Welch's philosophy in his style, his way of doing things. But, we've seen a lot of, I would say, anecdotal evidence, because I haven't seen the actual documents, but I'm hearing so much about what they're finding and wasted. It's kind of crazy to me that this is happening. Anyway, I'm teaching a starter chart class to everyone putting in 5K. And there you go. I'm sure people would love it. There's a lot of people that would love to learn more about trading and investing. So let's go back to this, at least the data worries here, so I can get this out of the way. Lisa, I'm flying from Colorado to New Jersey. I wouldn't feel nervous at all. Don't feel nervous. No, you're fine. Both of those were flukes. I know we've got people here in the airline industry. Both the Washington incident, complete fluke. That one just bizarre that even remotely happened. And then the one that happened in Canada, also kind of a fluke, but came in a little hot and heavy, skidded. They had a good story to talk about. I think they're getting $30,000 checks, but you'll be fine. Don't worry about flying. Still safer than driving any day. So home sales, I'm going to put that in the negative category because you're starting to see home sales slow down. If that continues and the trend does continue to get worse for homes, existing and pending home sales, I think that's just going to get worse with rising yields. So that would not be good for the economy. And our last piece here, at least the last piece I want to bring up here, is the services number. That's the services and manufacturing data that came out today. And if you look here for the U.S., we're a service We're not really a manufacturing economy, more of a service economy. And you can see here we dropped from 52.9 to 49.7. Anything below 50 represents pessimism and contraction. That's not good since we are a service society. Manufacturing increased just a little bit from 51.2 to 51.6, but that's fine. A little bit of manufacturing's gonna help, but really more money in services. So there's your bad data. I'm not so sure on why it was such a dramatic sell-off, but I think people are factoring in those pieces which we've been looking at, and then on top of that, this uncertainty of tariffs, right? This tit-for-tat tariff is going to go into effect in April, and already the tariffs with China. Once that does start to hit the bottom line, I think these numbers will all start to change. So I believe a lot of people are maybe just locking in some profit, positioning themselves a little bit better to, I guess, lock in profits and make sure they don't lose their portfolio on the way down. Now, today's move, Jack Ma, who was the CEO of Alibaba, I thought he disappeared, but I think he made back. I think he showed up again somewhere else. I don't know. I haven't followed that story at all. So let's real quickly look at the broad market indexes here before I dive into my next topic, which is going to be this monumental cryptocurrency hack. The second largest hack in history, by the way. So let's start off with the Dow, which I normally don't do, just to get a perspective of it. In the last 2 trading sessions, the Dow is down only 2.71%. I'm trying to fight a sneeze off right there. So not too bad. And technically, it still looks good, right? It's not making new lows. It actually looks fine. I would say it probably looks like it's going to start to compress here near the top. We get to the Nasdaq. Actually, let's go to the Russell. The Russell looking bad. Some of you may call this a head and shoulders pattern based off that yellow box we've got drawn in there. And it's been hitting this over and over again. This is now it's the first, second, third, fourth, fifth. This is the 6th time it's come down into that demand zone and hit it. Now, I make the argument that the more that something hits a supply zone or a demand zone, the more it taps into it, the more it's eating away at whatever demand or supply was at that level. So part of what we teach at Trading Academy is really trying to identify institutional footprints, right? How do we know where the big guys are at? Well, if the big guy is hiding in that yellow box, he's getting chipped away at. Whatever orders they have there is getting eaten away, and that's not a good sign. And if you're looking at this big picture here as kind of a head and shoulders pattern, right? Maybe he's got double shoulders, but he's got a double head and a double shoulder. But if we do the traditional measuring object, that would bring us to about there. I mean, all of a sudden, you're looking at a price target for the Russell that brings you all the way back down to 1891, which is, over 290 points away from current level. Well, that's over a 10% move. I don't know if we'll get there, but keep your eye on this, because if the Russell does start to break down below some of these pivotal levels here, that's not good. All right. This has always been referenced as the canary in the coal mine. It's small caps, and they'll lead the market either up or down. This was not good today, down almost 3% on the session. So that's the Russell. NASDAQ still looks great. Still looks absolutely fantastic. We could do the same thing we did with the S&P. If I go through the tails, it's really not it's not really respecting it, but you guys get the general idea, even though I know some are going to give me grief for not incorporating these 2 tails here. But you have essentially an ascending triangle here. It's been kind of looking great with the higher lows. You have the same basic highs across the top. I was a little surprised to see how quickly it fell today, because on Thursday's session, we had those 2 small candles from Tuesday and Wednesday that held that breakout. And typically you get a retest and then it bounces up, which was the anticipation. Now all of a sudden you are getting that nice big sell-off down to that kind of uptrend line, and we'll see if this one holds. But we're still looking okay, no big deal. And I'd argue the same thing with the S&P. It's still showing strength. Even though we had a giant down day today of 1.75% for the S&P, completely out of line with the previous 3 days. I mean, we had nothing going on. This was a boring week. And then all of a sudden Friday said, here, hold my beer. Let me change it all for you. So all in all, I still like where we're at. I still think the trend is looking pretty good. We'll see if there's follow through. The good news, I would say, is that the market panicked on a Friday. I'm okay with that. If markets panic on a Monday, then that can kind of spread through Tuesday, Wednesday, Thursday, and you could get a more pronounced decline. It's like someone put a circuit breaker on the pan. Oops, I'm hitting the wrong buttons here today. It's like someone put a circuit breaker on the panic button. So we can all freak out with the S&P, NASDAQ, Russell, but that stops. It's done. No more panic until Sunday night. And we'll see how it opens up. So we have this, a day and a half to chill, to calm down, and see if the markets can regroup and bounce back to the upside. Having said that, with this economic data, none of this is atrocious, right? None of this is just appallingly bad. Inflation slowly ticking up. That could hurt the markets. Job market's looking okay. We're 4% for unemployment. That's good, actually. Home sales, not looking good, because that means less demand for homes. That means less disposable income, less people spending, pricing people out. And it may also start to put people in a foreclosure type of situation. And then services and manufacturing, services not looking so good. But none of it was so bad, right? None of it was so bad you're like, oh my gosh. I know, I saw that, Big Ab. That Carvana chart is just like jaw-dropping. And, I kind of wish I stumbled on it earlier. It would have taken some serious cojones to short that one, Carvana. I still don't get it. I still do not understand why Carvana rallied 7,000%. I mean, that's 7 times more rally power than NVIDIA in the same window of time. That makes literally no sense at all. NVIDIA's changing the world with their technology. Carvana ain't changing squat. It's just a way to buy a car. It makes absolutely no sense. And if you look at the decline, today was another 10% down day. From that day we looked at the show or when we looked at it, it's down 23.8% since then. And I have a feeling this is going to continue to go lower. There's just no way you could substantiate these earnings valuations. And if you look at their earnings, okay, they estimated 31 cent profit, made 57. Great, that's good. It's still only 57 cents per share. Unbelievable. Andrew, I wouldn't say today was typical profit taking. I think that this was kind of a knee-jerk reaction, kind of getting close to a panic sell, where people just started, when one person starts something, the chain reaction happens, and it kind of felt like that's what happened over the course of the day. If you look at the way the market sold off today, here's the S&P. Let's go to a 5-minute. Right? We had this initial slide right in the open. Like an aggressive slide. It's like, oh, God, here we go. And then like pause. And, okay, great. Oh, we're fine. We're okay. And then we broke the lows again and just, boom, cratered again. And it really didn't slow down until the market closed. So I feel personally that this is automated, that this is algorithms just selling. It's just very consistent selling pressure here going on. So I do think that there's some AI to this where it's not just a normal profit taking. I think that this is triggered and it caused more computer-aided selling. But that's just my opinion. I could be completely wrong. But let's see. Toby says it's like a halt on a stock. Yeah, essentially that's all it did. It halted that fear for a couple of days, which is good because, this trend right here, I'm pretty sure you'd all agree, this has the potential to turn into something much worse. If like, let's say this was a Tuesday, and you had your small break where the futures market's closed and all of a sudden starts up again, this could certainly push lower and lower and lower and lower and lower. Ted says, gap down and pump up on Monday. Normally I would think something like that as well. I would say, okay, we might even gap up on Monday, but it's a totally new world. We don't know how the rest of the world's going to react to this, right? They may have a panic moment as well and the continuation from the U.S. markets and then all of a sudden drags us down in the open. So I don't know. I'm not going to jump in front of that either way. Remember, next week we've got NVIDIA reporting on Wednesday night too, which is another monster piece for the week. Next week you've got NVIDIA on Wednesday after the close, and Friday BMO you have the core PCE price index, which of course is the inflation measure. So wild stuff. Let's go to one more piece here, and then I'll switch it around back to you guys. Here you have one of the largest hacks that's ever happened in the financial markets. And this is why you saw, in crypto anyway, and this is why you saw Bitcoin take a big dive today. And I don't think we're done. I think this could continue on here. This is a pretty bad story. Bybit, which is one of the largest crypto exchanges in the world, got hacked. And they had a multi-signature wallet. A multi-sig wallet is essentially where in order to move funds from a wallet, multiple people have to sign off on the transaction. And what's crazy about this, I'm trying to comprehend it all myself because it's just bizarre the way it happened, is somebody spoofed the key holders. So let's say me and 3 of my friends are key holders for an account. So there's 4 signatures that are needed. We all 4 have to sign off before any of those funds can move. Somehow this hacker must have known this business and known who the key holders were, somehow got into their computers and put a device on that mimicked their sign-in screen and said, oh, you need to verify this transaction. When they verified it, because they're like, okay, it probably happens all the time, verified the transaction, it actually changed the smart contract. What they were signing to was a modification of the smart contract, which allowed the withdrawal of $1.6 billion worth of Ethereum. That's why I have the Ethereum logo on that. It's the ETH logo, just colored red. So kind of crazy. What's even crazier is this is all tracked. It is completely trackable. So if you go to, let me go on, it's on Twitter right now. There's a lot of people that are really following all the details from this one. I'm trying to remember. There's one guy in particular that I want to bring up here. I don't know if I can find it. I have so much garbage on my Twitter feed. You click on one little link and all of a sudden you get nothing but garbage, and I don't think I can find it here. What they do is they have these diagrams. I'm trying to find it for you guys. They have a diagram that shows where all the money has gone. Where did it all go? Who's got it? What accounts it's in? I can't find it for you. But they essentially moved it to 57 different wallets, and then they split that up, and they're really trying to shuffle it all over the place. And who knows? They're tying it back to that Korean hacker group. What are they called? Not Liberty. There's some North Korean hacking group that apparently is taking credit for it, and they've tracked it back to them. I can't remember the name off the top of my head, but it is a wild thing. Now, why is this so significant? Well, I'd argue it's really significant because it creates uncertainty about the whole crypto industry, right? How could you hack this? It may have used AI. It may have. Hi, Laurie. Yeah, someone's partying this week. Imagine stealing over $1 billion worth of crypto. Look, what this does, in my opinion, is it tells everyone here that if you have cryptocurrency, don't keep it on an exchange. I don't know how often I can have to say this. I know most of you understand this, but you should get yourself a cold storage device like this. I have a Ledger, and keep your crypto on that. Get it off of the exchanges. Because Bybit, by the way, this happened with Terra Luna and Three Arrows Capital. Terra Luna didn't have all the funds, so they went insolvent, went bankrupt, and that caused a $60 billion market loss in cryptocurrency back in 2021. That's really, let's go back and show you. This is is this Terra Luna? I can show you let's go Luna. I think Luna. Luna Tether. Yeah, so here, this is back in 2022. And just to put into perspective, Luna was trading up at $90, $81, and now it's trading at 24 cents. So it just completely imploded an entire market. And there's worry, I think that's why the crypto market sold off so aggressively today. There's worry that this may happen to the crypto space again. But Bybit is like one of the largest exchanges out there. Here's a reference to show you how big it is. Binance, this is the amount of billions of dollars in like a 24-hour window of time. So Binance is averaging about $22 billion in a day in transactions. Crypto.com, surprisingly, $10 billion. Bybit is $7.09 billion worth of transactions in a 24-hour window. To put it in perspective, Coinbase, which is the largest U.S. one here, is only $5 billion. This is as of January 31st. And you don't even see Kraken or Gemini on here. Pretty nuts. Have a great weekend, Thomasina. What if they steal Saylor's Bitcoin? So, first off, they got to find out where it's at, right? That's been a conundrum for me is, where is Michael Saylor's Bitcoin? I talked about this today in a crypto session. I think that it's all creative accounting. That's why I'm a little concerned that later on this year, maybe next year, it'll all start to come to light that the banks, just like the banks do fractional reserve lending, I believe the crypto exchanges are doing fractional reserve lending as well. And I think that's going to create a problem in the future. Could it be that Black Swan event that everyone keeps talking about? It very well could be. Jordan Matthews is here today. How do you feel about buying Kraken pre-IPO? They are doing a capital raise. If you can get in at the IPO price for Kraken, I would say, sure, do it. But remember the way that these things work, Jordan. You know, the underwriter comes in and does everything they can to pump up the price. So in their minds, I don't know what the strike price is, but let's say Kraken thinks we're going to have a $30 IPO. They'll pump it and pump it and pump it. And if demand is so big, the day that an auction goes off, they'll jump it to 40 or 50 or 60 and pump those prices up. So personally, yeah, I've been wanting Kraken to go public for a long time. They're supposed to go public in 2024 in January, and it's just gotten delayed. You're going to have other crypto exchanges. I believe that Gemini is also trying to go public this year. So it makes sense that these crypto exchanges go public. It makes them more transparent. We have more eyes on their financials. We can see better what they're doing, and they're held accountable to SEC rules and regulations. So I think it's a win-win if Kraken goes public. And if you can get in on some of that, sure, go for it. Just keep in mind what happened with Coinbase when they went public. It's been a bit of a roller coaster ride for Coinbase. So there's your Coinbase IPO, and you can see it sold off aggressively. Now, of course, this was during a bear market period with crypto, but Coinbase, they IPO'd right around $300 or something, and now we're almost back up to their IPO price. So it's got a long way to go. However, looking a lot better now. Their profits are amazing. The amount of people that are using them, great, and I think Kraken will probably do fairly well. So I like Kraken. I'm definitely a fan of Kraken. Good to see you, Jordan. Are the Bitcoin ETFs a safe haven, or are they susceptible to a similar hack? So great question, Ted. Ultimately, it boils down to how are they custodying their crypto? I believe Fidelity is self-custody. Now, part of me likes that. I like self-custody. However, if you're Fidelity and you're doing self-custody, someone could someone could find their way into your company, figure out who's the one controlling the hot wallet or the cold wallet, wherever you're keeping it at, and somehow hack that. Because a lot of those employees are familiar with the process. There's a department there for crypto where this crypto is being held. So when you self-custody, you run the risk. Even a company like Coinbase. Coinbase is keeping track of all these customer funds. How are they doing it? Some of it's done with cold storage. Are there hot wallets, cold wallets? How are they doing it? All they have to do is find one exploit, and they could potentially steal whatever's in those wallets, which is why you never share your public keys or private keys or private keys or seed phrase. Keep all that stuff private. So is it possible, Ted, that BlackRock somehow gets their Bitcoin stolen? It is possible. It is possible. So, Margaret, there's two different types of wallets. You've what's called a hot wallet and a cold wallet. Cold wallet is this. This is cold storage. Basically, it's disconnected from the internet. There's nothing connecting this at all. A hot wallet would be like a wallet I have on my phone. My phone is susceptible. It's connected to the internet. So in a simple explanation, a hot wallet is any wallet that's connected to the internet. There you go. So your exchanges are hot wallets. So Coinbase, Kraken, Binance, Gemini, Bybit, which got hacked for 1 point something billion dollars. That's a hot wallet, and there's always the potential that someone could get in there and steal from you. To be clear, a cryptocurrency has never been hacked. Like, no one's gone in and hacked Bitcoin. No one's gone in and hacked the code of Ethereum. They go after the exchanges and try to hack the exchanges where the crypto is being held. That's where most of this stuff happens. Yeah, I'm with you. I keep just a little bit on exchanges only for my students. Like when I've got a class on Tuesday for the focus class for Trading Academy. That session it's a 5-step transaction process where I go through where do you buy them, what's the best place to buy them, and all the places. How do you store them, hot storage, cold storage. How do you move them around? What do you want to do with it? And then how do you cash out? That lesson I do it live with real money. So I'll be moving money around, showing actual executions. And that's the only reason I keep my crypto on exchanges is for that. It's peanuts compared to the broader portfolio I have. Most of mine is on, I have 3 different ledger devices that has crypto, and I've got a bunch of paper wallets that I keep crypto on as well. Michael Saylor has a Bitcoin hoarding syndrome. He does, but he's smart. He understands the system. The system is there's only 21 million of these. And if you can get it popularized enough that our government has it as a strategic Bitcoin reserve, that companies want to hold on their balance sheet, that you and I want to hold this asset because it's limited, and all of a sudden other central banks around the world want to own it, and you're holding a huge chunk of it, your rate of return is going to be off the charts. Off the charts. So yeah, it's genius. Is Bybit insured? I'm not sure of that, JB. I do know, I listened to the interview with the CEO, and he says we've got way more than $6 billion. That's fine. We'll cover it all. Our customers will not lose funds. We've got it all backed up. We're okay. We'll take that hit. That is a good exchange. Like, that would make me want to work with Bybit, because it's easy for an exchange to go, oh, well, we got hacked. Sorry, customers are screwed. In this case, they don't want that to happen. They want to tell their customers, hey, you're safe with us. This won't happen again. Your money's not going to get touched. Everything you had was there. Don't worry. We'll take care of you. You're our customer. That's good business. Unfortunately, it doesn't happen all the time. I don't know if they're insured. Probably not. Let's see. What else we got? We got the hot wallet. We got that one. Okay, cool. It's got to be cold. Yep. Jim says, not your keys, not your crypto, not your wallet. Totally. But Jim, the sad part is people who start off and they're like, oh, I'm going to buy some Bitcoin. I'm going to get all excited. I'll buy some Ethereum or some Ripple. And they go to Coinbase. You feel like you're safe there. If you want to feel unsafe, read through the T's and C's, terms and conditions for Coinbase. There's a provision that it says, if Coinbase goes bankrupt, your assets are their assets. They're no longer yours. So if Coinbase happens to go bankrupt for whatever reason, anything you have there is now part of their account. That to me is wrong. I don't like that, but that's the way it is. He owns like 2 to 3% of it all, correct? Yes. So, we can do the math real quick. I can show you. So right now, Michael Saylor has roughly, I'm going to round up. It's like 470 or 490,000 Bitcoin. So there's how much Bitcoin they have. Out of the total that will ever be in existence, 21 million. So he's got about 2.4%. However, I'll show you something else here very interesting. There is a belief that if crypto has not moved in 5 years, right? 5 years, it's gone. It's missing. Okay, so let's go here. I will bring this up while I type it in. RG. So there's a website I like called Largest Bitcoin Address. It's BitInfo Charts. Cool site. So you look out here. This shows you all the most expensive wallets. And this is why I'm really skeptical on Michael Saylor and MicroStrategy. Is he says he's got 470,000 Bitcoin. Where? Right here is the largest address in the world. It's got 248,000 Bitcoin in it. That's the largest single address in the world. Yet Michael Saylor says he's got 470,000. Yet BlackRock says they've got like 600,000. Where is it? I need an address, right? Trustworthy. And by the way, for those of you who are hearing about the strategic Bitcoin reserve for the government, part of Cynthia Lummis's proposal, which fingers crossed this gets signed, is the government's going to buy 1 million Bitcoin over the next 5 years. Great. So 200,000 a year. Fantastic. And they will put it in a singular address that will be publicly available. So you can log in anytime you want and see our government's holdings of Bitcoin. That would make me feel more comfortable about the government. That knowing that they actually own this Bitcoin, right? Michael Saylor tells you he's got all this. BlackRock says they got all this. Where? I don't see a BlackRock wallet. I see Kraken. I see Binance. I see Silk Road, FBI confiscated wallet. But I don't see any other wallets here tied to Michael Saylor, MicroStrategy, BlackRock. I don't see any of that. And that makes me really, really nervous. So what I wanted to show you is this. Yeah, me too, Kenny. And by the way, if you follow Cynthia Lummis on Twitter, here, you guys should all, I'm going to bring you Lummis, Lummis. I'll bring this up for you because you should all check it out. She posted this today. Where was it? So it begins. Where was it? There was one she posted out today, says, look, citizens, it's up to you. Contact your senators. Contact your representatives and tell them that you want a strategic Bitcoin reserve. Where is it? Well, dab nabbit. I'm going to just doom scroll here and not show you anything. But she has been very vocal. Like, yes, she's pushing, but, I should, to help the cause, go out to California senators and say, listen, you should really look at the strategic Bitcoin reserve. I think it's important for us. I think we should be doing it. And to me, that is critical. Like, you have to talk to your people and get your representatives and get them to not to sell them on it, but at least open their ears to the discussion and maybe explain to them why it's a good thing. So let's go back to this real quick. There's a thing called dormant Bitcoin addresses right here. You can see on the screen, dormant Bitcoin addresses. And what this does is it shows you the addresses that have not moved for a certain window of time. So most people believe that 5 years is the cutoff. So if it hasn't moved in 5 years, the belief is it's lost, right? So right now, there are roughly 6 million Bitcoin. 6 million Bitcoin that have not moved in 5 years. So if that's true, if we take this at face value, that there will only ever be 21 million, and 6 of those are already gone, that means there's only going to be 15 million in circulation. So now Michael Saylor's position has just gotten bigger percentage-wise of the whole. So yes, there you go. Yeah, out of courtesy, Mitch McConnell probably should have retired a couple years back, right? But this is why I'm a believer that we should have term limits for many different reasons. One of my representatives, Elizabeth Warren, I don't think she's taken. Sorry, Kenny. Well, I would hope that Elizabeth Warren would be open-minded and sit down with industry professionals just to hear them out about why digital assets are important for the future, as opposed to, no, I don't want to hear it. No, I don't want to hear it, which is kind of what she's doing. Now, I've noticed her talk track has changed a little bit because I think that she got a little bit nervous in her district vote. It got pretty close with her and the other representative out there who was pro-crypto. And I think she's realizing there's a lot of people who are pro-crypto, so she might want to change her tune here going forward. Yeah, so there's a guy in the UK, I think he's in Wales, somewhere in England, who had a hard drive he threw away. It had something, at the time, was like $500 million worth of crypto on it. Can you believe that? And he's trying to get the city of the government to excavate the landfill site just to find this hard drive so he can get it off there. But they've said no repeatedly over and over again. Man, that would drive me. I'd be sneaking in there at night with a little trowel trying to find that damn computer. Anyway, these are, obviously very interesting charts that help us understand the dynamics of supply and demand of Bitcoin. And that's why I'm such a fan of Bitcoin is there will only be 21 million, and right now it looks like 6 million of them are lost. It's crazy. A lot of states have this thing in motion on a state level, don't they? Yes. So there is a, I don't even know where it is now. It might be under my crypto tab. Let me look on my crypto tab here. I think I actually, no, there was a page, I can't remember that off the top of my head, that shows the states and which one has initiatives for Bitcoin on a state level. As a strategic reserve for the states. That's not federal. States are much smaller, obviously, with money-wise. But, if we start seeing a preponderance of states saying, hey, we should hold Bitcoin, the government will follow suit, and, those of us who hold Bitcoin will be loving it. Loving it. Let's see. Merlin, where is the best place to get crypto news? Michael, that's a really tough question. It's a really tough question to answer. And the reason I say it's tough is I believe that there's a lot of good people out there and there's a lot of scammers. There's a lot of people that are really going to try to feed you misinformation and they'll attack different crypto projects just because they don't like it. I would say usually Twitter is where I get my news. And I follow people that I think have more credibility. Adam Back is one of those. Charles Hoskinson is one of those. Jimmy Song is another one. These are programmers and developers that are all about the technology and not the politics of it all. Right? You like that? Yes, my girlfriend made this shirt for me. It's a Trader Merlin shirt, by the way. I don't have them manufactured. I haven't made them. It was just kind of a funny idea. She threw them together. She's like, you should start a store with merch. I'm like, I ain't got time to do that kind of stuff. So, anyway, let's see. I think that's all the topics I had covered for today. And again, this hack, I think this is going to linger through the weekend, and let's see how it all pans out. Ultimately, if this goes smoothly and Bybit covers it and they come after these hackers, then crypto should be fine. If this starts to escalate, folks, crypto next week could be real bad. You know, those levels we've been looking at as holding price could just annihilate. I mean, they could disappear very, very quickly. So you would buy a mug? All right, maybe I'll look at making coffee mugs out there. Merlin, what percentage of your Bitcoin has not been moved in 5 years? Let's see, three out of 9. So 33% haven't moved in 5 years. Back, those are ones I bought back in 2017 and 18. So yeah, and I see where you're going with that, Les. So I would bump it up to like 7 years maybe. But the truth is, there are a lot of Bitcoin that are missing. A lot of Bitcoin that will never be recovered. For example, I sent $300 worth of Litecoin to a Litecoin address, but I forgot to write down. Long story, but I didn't have the private key. So essentially, I threw $300 worth of Litecoin away. It will never be recovered. No one has the private key. It's gone. Bitcoin buying opportunities coming next week. Possibly. You look at that price chart of Bitcoin, and it's still doing what we've said it's going to do. It's going to stay inside that box until it doesn't. Let me look at the daily time frame here so you can peek at it. It looked positive yesterday. We were actually breaking above. I was like, oh, here we go. And again, I've got a bunch of MicroStrategy, so I do want to see this go to the upside. I was looking forward to it. Now, if this thing does escalate, I do think you'll end up falling down this yellow box, which is now 90 grand. We had a swing today between the high and low. The high of Bitcoin today on the futures was 99,000. Your low is 94. So you got a $5,000 swing. So it could easily fall all the way down to 90,000 over the weekend, since it's 24 hours, or at some point in the near future. But let's, fingers crossed, hope this all kind of goes away smoothly and Bybit can cover it, as they say they can. Remember that Terra Luna also said that they could cover it. Well, we've got it. We got no problem. We're covered. And boom, tide went out and they didn't have anything. So let's hope Bybit is okay with this one, because it could certainly cause some more pain and downside movement. And ultimately, you look at the price of Bitcoin here. Right here is where Terra Luna fell apart. Terra Luna fell apart, and Bitcoin dropped from 65,000 all the way down to 15,000. Right, it's 78% slide. Of course, this was the first year of the 4-year cycle as well, conveniently. But I think we're too early to start that cycle right now. So yes, I do think there's long-term buying opportunities here for Bitcoin. Again, I will repeat this till it happens, because it's going to happen. At some point, you're going to see corporations jump in and start buying significant amounts of Bitcoin, because now they can. Banks are going to get into the action, and if we get a strategic Bitcoin reserve, you guys will look and just be kicking yourselves you didn't buy it at 90,000 or 94 or 95. It looked really bad. Let's see. What did he say, Jim? Ted, I don't think we're getting down to 70. 70 would be a pretty significant drop. Is it possible? Of course. Of course it's possible. To get down to 70,000 on Bitcoin right now, you're looking at a decline of about 25%. And I just feel like there's too much strength and positive impact on Bitcoin overall to get it to fall that far. I think Michael Saylor just start gobbling stuff up left and right if it got down to 70. But you never know. You never know. What else we got? Costco should add Bitcoin. No, I don't think Costco should have Bitcoin. I mean, who knows? Maybe they'll come out with Costco Financial Services or something at some point. But all right, that's going to do it. Monday, we got really nothing on the earnings front. There's a bunch of random weirdo companies. No big deal. Monday's economic announcements also very light. Really, everything starts later on in the week, especially Friday's the big one. So that's going to do it for us for today. Again, for all of you that are in the simple options strategy at Trading Academy, or options room at the mastermind community at Trading Academy, my apologies for completely spacing. Reach out to me. Let me know if this upcoming Friday works. I'm happy to do it then. If that's already taken with someone else, I'm happy. Remember, I can only be in there for like the first half hour. The class starts at 1. I can maybe make it to like 1:30, then I got to come and get ready for the show. But I'm happy to come in. And again, my apologies for missing it. Pretty embarrassing that happened to me. But will Bitcoin ever be used as collateral for loans? Yes. It is already being used as collateral for loans. There are companies that will use Bitcoin as collateral and let you take out loans against them. Yes, you can, and it will happen. Things like this really are hurting the legitimacy of Bitcoin, just like the meme coins. Yep, unfortunately, you're right, Steve. And, what it's going to take is regulators to come in and fix this. Have a little bit of extra oversight and clarity on safety, security, insurance for crypto space, and that'll add more legitimacy to it, and then things will really take off from there. So, all right, guys, that's going to do it for me. I'm going to get out of here before a 1 hour show. You get me talking about stuff I like, and I just keep going and going and going. But if you have any comments, questions, feedback, emails on the screen, tradermerlin@gmail.com. Let me know things you want to talk about. There's one thing, hold on, before I wrap up here. Jeff Mackey had this question, and I'm so bummed, or McKay had this question, and I should have answered it the other day. Here's the question. He says, would now be a good time to buy deep out of the money puts on SPY? Is it better to buy as SPY or SPX? Oh, I wish I answered that for you when you sent it on Tuesday or Wednesday. Yeah, if you think that we are going to start to see these markets roll over and things slow down, then go deep out of the money. Take a little bit of disposable capital and buy something that's way out. You're most likely it'll expire worthless. However, today was a good indication of panic setting in. And if that does continue, if things start to get worse and worse and worse, then yeah, deep out of the money puts work. I would do them on SPY. It's a cheaper item. SPX is also going to be European options, whereas SPY is American options, which means it can be exercised anytime between now and expiration. If you use options on SPX, those are European, and that will only you can only exercise it at expiration, so you don't have to ever worry somewhere in between. All right, that's going to do it for me, everybody. Have a fantastic weekend. Do something fun. Cheers to all of you, and I will see you guys on Monday. Take care.